In case you guys missed a community post, American Waterworks raises its dividend. So American Waterworks declares a 65-cent per share quarterly, which is an 8.7% increase from the prior dividend of 60 cents. How cool is that, guys? The ex-dividend date is May 9th. So you'd have to own the stock before May 9th, and then you would get paid out on June 1st. So congrats to all the American Waterworks shareholders. It was a pretty amazing dividend increase. And the last dividend raise that we got for the month of April, guys, is actually Apple. So Apple ends up declaring 23 cents per share quarterly, which is a 4.5% increase from the prior dividend of 22 cents they were paying. I was actually expecting more of a 7 to 8% increase from Apple, so I'm kind of disappointed on that. It was basically a penny that they raised, but I'll take that. Anyways, the other thing that they did is that they authorized an increase of 90 billion to the existing share repurchase program. So this is a way to technically own more of the company without having to. It's basically a tax efficiency thing for this, but congrats to all the Apple shareholders for this raise. What's up, everybody? This is Investing Sensei here to bring you episode 132 of the Portfolio Update. Hopefully you guys are doing awesome. I definitely am, especially for the fact that we finally achieved one of our goals for 2022. And if I pull that up, you guys will see that one of our goals for 2022 was to reach 6,000 subscribers. We are finally over 6,000 subscribers. So thank you so much for each and one of you. You guys made this possible. Thank you so much for subscribing with that notification. And if you haven't done so already, be sure to do that as well. Drop a big thumbs up on the videos to help out the channel. And yeah, we'll see how much we can make. We're barely in the month of May, so let's see how 7 more months can where it can get this channel towards. So definitely be sure to drop a big thumbs up to help out with the channel on the algorithm. But we have a couple more goals we are going to try to continue to achieving on 2022, and then we will see where we go from there, guys. So it'll be exciting. So thank you so much for everybody. But in this video, I have some pretty good content that I think will be worthwhile watching. But first thing we're gonna do is I'm gonna go over the portfolio, how the portfolio performed this week, and then what I bought, what I sold, any dividends that came in, and then from there we'll jump over to actually 5 companies that are expected to raise their dividend in the month of May. So you guys already know that I typically try to make these videos towards the beginning or the last week of the month so that you guys are prepared for the coming month. So in this video, I have 2 companies that are actually in my dividend growth portfolio, and then 3 other companies are companies that I potentially think that a lot of my subscribers own. So that is why I added those. So it's gonna be 5 companies, and then from there, once I go over those, I will go and we will kick off these scripts, guys. We will see how much we actually grew the dividend snowball. These are all scripts that I have completely available for free. Remember that this continues to grow, this dividend snowball, so it's very, very nice because every single Sunday we come back, we see these snowballs continue to grow, especially with the portfolio being super volatile, especially in this time right now. We go up 10,000, go down 10,000, but this dividend snowball, we know that every single Sunday we kick this off, it's going to continue to grow and grow, and that is what we like to see, because eventually we are going to live off these dividends, and they also become qualified dividends, so it's very, very great. The other thing that I will be doing in this video towards the end is I'm actually going to be answering one of my subscribers' questions that they did email me. This is a subscriber, is an awesome subscriber that supports my channel, typically comments really positive things and my channel, so I will be giving my opinion on it, and so definitely stick towards the end. And yeah, let's go ahead and get started, guys. So first thing that we have here, guys, is the portfolio is at $185,251.06. And then you'll see our buying power is actually $60.94. So that's quite a bit of buying power that we do have. And the reason is because a lot of my companies in the month of April paid towards the end. So I believe by Monday or Tuesday we should see the final results on how much we made for the month of actual April, and we will start the month of I guess we'll start Q2 of 2022. Hopefully we surpass 800. So this is the quarterly dividends that we have. We continue to track these every single quarter, and you'll see this staircase continue to go up and up and up. This right here was just a correction because I did readjust my portfolio, sold out of some positions that had a higher dividend yield. A lot of my portfolio holdings are in the lower than 2% dividend yield, so that is why you'll see that a huge amount invested into my portfolio, but I have such a low dividend yield. If we look at the annual payout, you'll see that 2022 we've made $781.60 so far for the first 3 months, and we've already surpassed 2019's for the annual full year. So it is super cool, guys. We will see where this ends up, and it'll be exciting. So if we look, guys, at the value over time, if we look at the 1 week, you'll see that we actually went down 2.89%. That's about $5,500. And remember, this is unrealized gains or unrealized losses. You don't lose it until you sell, and so we have been going down. If we look at the 1 month, we're actually down 13.51%, which is about almost $29,000, guys. We just have been going down, 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 and the reason is because the NASDAQ has actually kept going down, and my portfolio is mostly heavy into the tech sector side, so I definitely see those moves and feel them. But at the end of the day, we continue to see those snowballs continue to get bigger and bigger. As you'll see that by the end of the video, this is going to be much higher, even though the portfolio value is much lower. So we will see by the end of that video. But if we look at the 1 quarter, guys, you will see the volatility. We went down all the way to like 187,000, and we went back up to about 213,000, and now we're back down. So 185,000. We will see what happens. We're going to continue to dollar cost average no matter what the portfolio is doing, and we're going to continue growing that dividend snowball, because at the 1 year you'll see that we're at 3.88%, which is about $6,000, almost $7,000, and you'll see the trend is going upwards. If we look at the overall, you'll see the trend is upwards, and we're going to continue to see that grow over the long term, and we will continue to build this net worth and dividend snowball. So I'm not gonna make any different changes. I'm gonna continue doing the dollar cost average, and I think in the long term it will pay off, because we are invested in some great business, and we will see. But if we look, guys, let's go ahead and jump over here to the activity so I can show you guys what I bought and what I sold, and then any dividends that actually came in. So if I look at the dividend range, guys, you'll see that if we look from the last week, you'll see the 24th of April, which actually would be the 25th, and then towards this date, you'll see that on the 28th I deposited $160, and then on the 28th, same thing, I did 4 buys, guys, $160 that I invested. So I bought $40 worth of Home Depot, $40 of JP Morgan, $40 of Starbucks, and $40 of Microsoft. This past week, guys, the market was pretty rough, which created some great buying opportunities. So instead of me putting just $100, I went ahead and put an extra $60. Right now I'm trying to save some money, but I will continue to buy the dip. And then you'll see the 29th, Altria paid us $54.31, and then American Towers $6.63. And then, guys, on the 29th, I deposited $60, and then I did 3 buys. And remember, guys, that one of our goals here is to, every time a company pays me out a dividend, I will contribute an additional $20 just to grow that dividend snowball, or I guess grow that dividend for that same company much larger for the following quarter. So we bought $20 worth of American Towers and Altria because they paid us a dividend, and JP Morgan was supposed to pay us this weekend. I don't think it'll show up in the account until about Monday or Tuesday of this coming week, but we did buy the $20, so we're still continuing. We're on track for our goals for 2022. Yeah, that was actually it. You'll see this green button called calculate dividends. I actually have a script for this. It's completely available for free if you guys want to check it out. All I ask in return is that you're subscribed with that bell notification if you have not done so already, and dropping a big thumbs up on my videos to help out the channel. But you click on this button, it'll calculate, it adds up all your dividends on this page, and does it on a pop-up. So let's go ahead and find out how much we made for this week. Completely passive, guys. So it looks like we made about $60.94. So that is pretty awesome, guys. Imagine when we're making way more. So it'll be exciting. And then real quick, if we want to, we could probably go ahead and see how much we made for the full April so far. Remember, we haven't gotten JP Morgan's yet. So if we do that and then we filter out by dividends only and click calculate, we've made about $89, almost $90 passively this month of April, and we had to do absolutely nothing. We're still waiting on JP Morgan's dividend, which is typically very massive for us. It's usually able to buy one full share of JP Morgan, which is pretty awesome. But yeah, guys, this is all I have for you guys on the activities. If you know, I think it's a perfect opportunity to actually jump over to the 5 companies that are expected to grow their dividend, or I guess raise their dividend in the month of May. So let's go ahead and start with the first one, guys. So the first one is actually Leggett & Platt. They're trading currently about $35.63. This company is in my dividend growth portfolio in my consumer section. If we scroll down to the dividend summary, you will see that the dividend yield is 4.72%. Annual payout's about $1.68. Payout ratio is about 59.71%, so towards the higher end of the payout ratio. 5-year CAGR is about 4.32%, and then dividend growth, I believe this is actually wrong. I believe they have continued to increase their dividend, but yeah, if we look at the dividend history, guys, you will see, if we scroll down, you will see that typically on the second quarter, so this one's the May 3rd, 2021 is when they'll raise their dividend. So you'll see it's 42 cents versus the first quarter, which is 40 cents. And then if we use the 2020 as an example, this is 40 cents, and they didn't raise it there, and that was because of the pandemic. But if we go to 2019, you'll see second quarter, that was May 7th, that was 40 cents, and then on the first quarter was 38 cents. And then you can continue going downwards, and it's typically always the second quarter around May. So we will see if we do get a raise this coming month for Leggett & Platt, but definitely looking forward to it. Let's move on to the second one, guys. The second one is Pepsi, guys. So Pepsi is trading about $171.71. If we look at the dividend scorecard, this is another company in my consumers section subpie, and this is actually currently in the dividend summary. Dividend yield is about 2.50%. Annual payout's about $4.30. Payout ratio 67.93%. 5-year CAGR 7.39%, and then dividend growth, I believe they actually became dividend kings this year, but I think they already announced the dividend raise back in February, and I think it was close towards the 7% increase. But I will show you guys the dividend history just so you guys can see. But in May, it should show up in the dividend scripts. Remember, real quick before I show you that, if I go over here to dividend payout, you'll see that my scripts, which I have completely available for free, all I ask in return again is that you're subscribed with the notification and you drop a big thumbs up on my videos. But those scripts will pick up the dividend increases for your companies. So in May, Pepsi should pick up the script should pick up Pepsi's dividend increase, so it'll be pretty amazing, guys. And you know, we definitely look forward to that. But if we look here, guys, you'll see that the second quarter, which is typically May 4th, this is where they raised their dividend $1.07, and then on the first quarter $1.02. If we go to 2020, May 5th, $1.02, and then 95 cents. So typically the beginning of May is when we'll get the raise from Pepsi, that it'll show up on Seeking Alpha, and then the script should pick it up, guys. And the third one, guys, let's go ahead and move on to that one, and that is Lowe's. Lowe's is currently trading about $197.73. This company is actually not in my dividend growth portfolio, but I think a lot of my subscribers do own it, so I figured I would cover it. But the dividend summary is current dividend yield is about 1.62%. Annual payout is $3.20, and then the payout ratio is 25.06%. So they have plenty of room to grow that dividend, and 5-year CAGR is almost 18%. That is pretty impressive, guys. Dividend growth is about 58 years, so that is an amazing company there. If we look at the dividend history, guys, and we scroll down, you'll see that typically the third quarter for them, which is typically around May 27th, May 28th, May 31st, they typically increase their dividend, so 80 cents, 60 cents, and then 55 cents. So it kind of varies, right? So it looks like they change it. So last year in 2020 they changed it to the fourth quarter, but if we look at 2019, you'll see that this is where they raised it, so 55 cents versus 48 cents. So I think they probably will end up raising their dividend. We will see what happens, but let's go ahead and move on to the fourth one, guys, which is actually going to be Clorox. So Clorox company, I used to be invested in this one. I actually sold out, and it's currently trading at $143.47. If we look at the dividend scorecard, guys, you'll see that the dividend yield is 3.23%. Annual payout is $4.64. Payout ratio is 103%. So I'm not sure if this is all fully accurate, but this is a concerning thing. 5-year CAGR 7.71%. Dividend growth is 20 years. I think it's actually way higher than that, but I'm not 100% sure. Seeking Alpha has been known to have some of these values incorrectly, so don't go based off of this. But I will show you the dividend history here for us, and we'll see that typically on the third quarter is when they raise their dividend. So you'll see that 2021 they did it on June for some reason, but on 2020 they did it in May, and then if we look at 2019, they did it in May 20th. So you'll see $1.06 versus 96 cents, and then here $1.06 versus $1.11. So typically May is when we expect Clorox dividend raise. We will see what happens, but let's move on to the last one, guys, which is actually going to be American Towers. And American Towers is trading currently $241.02. You'll see the dividend scorecard right now is about dividend yields 2.32%. Annual payout is about $5.60. Payout ratio, again, I do need to double check this. It's 106%, and then 5-year CAGR is about 18%, and then dividend growth 10 years. Definitely don't go based off of Seeking Alpha. They have been known to have some of these values incorrectly. And if we look at the dividend history, and then we scroll down some, you'll see that May 27th, you'll see that they raised their dividend. This company typically raises their dividend almost every single quarter. I think they're gonna get to a point where they need to stop, and then you'll see the May 19th, they also increased it, and then May 22nd as well. So most likely towards the end of May is if we're gonna get a dividend raise from American Towers, if they finally actually do it. But these are the 5 companies that are expected to grow their dividend or raise their dividend in the month of May. Let me know if you guys own any of these companies in the comment section. I'll be excited to see if you guys own any of them. But first thing, guys, or I guess the last thing we do want to do before we get to the subscriber question is kicking off the scripts, because it is awesome seeing this dividend snowball continue to grow and grow, and you know, just seeing that passive income you know, get bigger and bigger. So first thing we're gonna do, I went ahead already and made the copy of my last week's, and so we should be ready to go. So if I go actually over here to settings, well, let's go ahead and do the dividend payout. So let's see if some of the dividend increases show up here. So you'll see that we are going to start off May pretty strong, and these are the companies so far expected to pay out in the month of May. We'll go ahead and click portfolio tools, get latest dividends. This should run, this should wipe everything, and this should pick up any new companies that declare dividends like Apple, and then I believe American Waterworks. So we will see if they get picked up, and it looks like it did pick up American Waterworks. So you'll see the dividend raise once it's done. So if we zoom in here, you'll see that Apple it did pick up the dividend raise, and they will be paying out the 12th, so that'll be pretty cool. And then American Waterworks about 8%. So you guys see the pretty awesome things about this dividend scripts. Remember, I have these completely available for free, so check them out. Let me know any comments or feedback that could improve these scripts. And if we look over here to settings, guys, we'll go ahead and wipe this, and we'll have to jump over to personal capital to get the latest version of our portfolio holdings so that we can see how much we grew the dividend snowball this week from all the purchases we did. So I will see you guys over there. Alright guys, so we're here at personal capital under my M1 account. You'll see this green button. Click on it. It copies the content of the portfolio into your clipboard. Then you can jump back over to the Google Sheets, right click, paste special values only. And then at this point, you can jump over here to holdings, and you can click portfolio tools, update portfolio holdings. This will actually wipe this whole sheet and recalculate everything. I guess, you know, parse it and stuff with what we just pasted. So click on it and you'll see it go into action. We can jump over here to the dashboard and everything is being calculated. And then the dividend yield should be much higher because the portfolio did drop in value, guys. So you'll see dividend yield is 1.71%. And then dividend, I guess the yield on cost for us has gone up, and that's because of the dividend raises we received. So that is pretty sweet. Yearly, you'll see we are projected to make $3,177.21 compared to $3,159.97 from last week. So how cool is that, guys? Even though the portfolio dropped in value this past week, we continue to grow this dividend snowball. So that is why I love dividend growth investing. You'll see monthly we went up about $1 or so. Weekly we also went up to about $1, so 61 cents, or I guess $61.10. And then for the day we went up about 4 pennies. And then hourly we're still making 36 cents every single hour. And this one, guys, the hourly work wage, so this is if our portfolio was to go work a 40-hour work week, we would get an hourly rate of $1.53 for every hour that we work. Or I guess if the portfolio was to work a 40-hour work week, they would get paid $1.53 per hour. Our long-term goal is to try to get this to minimum wage. Let's see how long that takes us, but that would be pretty impressive there to get to that goal. But this is what I have for you guys in the scripts. If you know, it's stuck all the way to the very end, be sure to drop a hashtag raises, because you know we are just getting all these raises and it's pretty awesome. So here is the extra bonus content that I will be providing to you guys for the video, which is actually going to be the question I got from one of my awesome subscribers. And let's go ahead and get into that. Alright guys, so here's the question, but before we dive into it, this should be used for entertainment purposes only. This is not financial advice, so take this with a grain of salt. But the email says, "Hello my friend, I hope you're doing well. I would like to have your opinion. I have $50K to invest in my dividend portfolio. My question is, continue to DCA or lump sum, including to those premium like AbbVie, J&J, or buy only the companies that have fair discount values. Have a great weekend." Congratulations on having $50K to be able to invest into your portfolio. That is a pretty awesome thing to have that ability. And the next thing is that you know, these are some pretty great questions, but the first thing I do want to actually dive into is you know, should you DCA or should you lump sum investing? And so just for people that are new to the channel or are not familiar with this, DCA stands for dollar cost averaging, meaning that you're going to continue to average into the portfolio every single week. Or let's say you were to do it, I guess to make it simple, let's say you were to do every single week, just to make the math easy. Let's say 52K is what he had and he was to dollar cost average, and he's like, hey, I want a dollar cost average for the full year. For one full year, he would divide that by, he would divide the 52,000 by 52, which is 52 weeks are in 1 year. So that means that he would dollar cost average $1,000 every single week and invest into the portfolio. And that is dollar cost averaging. It typically gives you a really pretty good average because the market is very volatile, going up, down, and that will give you the best average, because sometimes it's very hard to try to get the bottom, or you could buy at the top. Lump sum investing is, you have the 50K, you just dump it all in at once, and you call it a day. And first thing we want to answer for that is, let's go ahead and see the statistics on versus dollar cost averaging versus lump sum investing. So if we look at this overall, the study suggests that lump sum investing will outperform 12-month DCA over 60% of the time. These results aren't surprising. Statistics show the stock market is upwardly biased, and so this is a great thing here. So first of all, you would probably go right away with saying, I'm gonna just go ahead and lump sum investing because the statistics are there. But remember, guys, what is happening in the market? Current inflation right now is in the United States is about 8.5%. It's probably a lot higher than that, and I'm assuming that maybe towards the summer we might actually start decreasing as the Fed continues to increase rates. This is creating some risks that we might go into a recession. So cash would be pretty great there, because if the market was to drop another 25%, you have the ability and you have the buying power for to buy these great companies at a discount. A lot of the times you think cash is trash, is what they've said before, but 2020, if you had cash and you were buying, that was a great opportunity. So if we look at here, guys, the GDP. So GDP fell by 1.4% last quarter. And so what does that mean to us? So this thing is, how do we know when you're in a recession? Typically economists call a recession when a GDP has declined for 2 consecutive quarters. So that means that this past quarter we fell by 1.4%. If the next quarter we fall, we technically would be in a recession. So remember, take into account, inflation's at all-time highs. So I'm not sure if lump sum investing would be your thing to go with, especially with the statistics that I showed you. So it's a very difficult question there. There's a couple choices you can go with. You could obviously do the lump sum investing, and let's say the market starts recovering and goes up, but at the same time you could lump sum investing and we could drop another 25%, and then you will be kind of upset because you could have bought even cheaper down. So my goal typically is to continue to dollar cost average. One thing that you could potentially do is you could do 25K lump sum investing, and then the other 25K dollar cost average, depending on how far you want to dollar cost average. Let's say you wanted to do it all the way till 2022, or you want to do 1 full year, then you dollar cost average every single week or a month, whichever one you want to do. And so that would give you the best the best of both worlds. You could do lump sum investing and the dollar cost averaging, so 25K and 25K, or you could just do 50K dollar cost average, see how the market performs. So definitely do the pros and cons. And the other question that you did have there is actually if you should invest into premium companies or try to look at fair discount values. So for me, I have actually been buying a lot of the companies that have fallen below the 200 and 300 simple moving averages, and I will continue to dollar cost average into those. Obviously the premium companies, I continue to reinvest the dividend plus add an additional $20. I will continue to do that no matter what happens, but the ones where I'm putting a lot of my money are the ones that have fallen under the $200, $300 moving averages. Definitely take your picks on that. You can't go wrong with the premium companies as well. Remember, try to invest in the companies that 5 years from now or 10 years from now will be much more valuable. And so it depends on also your time horizon. So a lot of factors you need to consider, but this is a great question.
hopefully I was able to give you a little bit more information to help that decision. Thank you so much for that question, and thank you so much everybody for watching. If you stuck all the way to the end, be sure that you're subscribed with that bell notification. If you have not done so, drop a big thumbs up on the video to help out the channel, and I will see you guys in the comment section. Take care, stay safe out there. Bye guys.